Let me now bring on board Anish Damania, Head of Institutional Equities with Emkay Global Financial Services. Anish, good morning. Thank you for joining us. Anish, first it was technical, then it was local, and now it is global. There are no landmarks on the horizon which are suggesting that markets want to go high.
You see, I have always been maintaining and talking to your channel that look, liquidity is something which we don't have a clue about. What we can expect or predict is what the earnings direction could be, and I always used to say that the earnings direction doesn't look too good. I wouldn't know when the liquidity will dry up, when things will not work out the way they are expected to work out. So one needs to look at stocks in a way that if there is earnings growth, you need to look at the stock as to what price you need to buy. So when you start buying because others are buying, or where there is no other alternative, then when things don't go your way, stocks have to correct. We have seen that happen umpteen number of times, and probably a couple of examples which I can give straight away is if you look at Larsen, it's down about 20 odd percent from its recent highs of about 1700. The same is the case with HLL. So these were the stocks which were bought because there was no alternative, and now the other parts of the portion of the FMCG space are also cracking. Everybody knew that the valuations were high, but people were investing because there was no other alternative or there was no other stock avenue available. So when the liquidity has a role to play up to a certain point of time. After that, earnings and valuations take over. So I think this is that time to start introspecting as to what we need to buy at this point of time. And clearly, what comes to my mind is where you will see earnings growth with reasonable valuations is something where you will need to be in.
Anish, what is it that you like out of the IT pack?
I think clearly our preference is also towards the IT. We like HCL Technologies and to some extent a couple of mid-cap stocks with Hexaware at this point of time also figuring in that list. We as a pack, as Tushar pointed out, it's moving towards a pack where, this year you are going to see some more optimism come into the earnings stream as compared to last year in IT. So, and given the fact that some domestic businesses are not growing the way they were expected to grow, like the FMCG, there has been a shift of weightages from FMCG into IT.
Anish, what is your sense in terms of infrastructure? Because we've seen marked underperformance over the last many weeks. Do you think post-budget perhaps this sector may come to the fore in terms of some announcement that we can see in the budget?
See, if you look at infrastructure in pockets in the power sector, it has already been happening since the past 1 year. There have been concerted efforts to get projects on stream. So if you look at there are various pockets in which the government is working, and I'm sure they'll keep on working irrespective of what the budget says or doesn't say. And I would say that budget should be an event which should be like a compilation of the accounts as to what has happened and give a broad direction to where the next 5 years is going to be, and see that it continues, rather than sort of tinkering every year with in certain respects with most of the things. So where I look at it is I'm not looking at this budget, to start saying that there'll be a huge boost to infrastructure. They always announce that I'm going to spend so much, etc., etc. And then on the ground we don't see a lot of that happening. So what I want to see is over the next 6 months, the way the steps have been taken in the power sector, maybe the steps starting to take some steps in the road sector, in infrastructure to promote ports and airports. So if we start doing that on a sector by sector basis, I think that is what I'm looking at.
Anish, final questions. Since I know you got your ears always close to the ground, who sold out of Welspun, Core Projects and Gemini Communication yesterday? These stocks were down by more than 50 to 20%.
I don't know about what's happening there, but what I can make out is that these are not signs of a bull market. In bull market, these kind of collapses don't happen across a varied section of stocks. So what we are seeing is somebody is getting out of those positions or being forced to get out of those positions, and which is why we are seeing collapses in stock. Also, it could be quite possible, I'm not talking about these particular stocks, but there could be references made to say that, okay, some of the stocks may have run up a lot ahead of their fundamentals, and hence somebody has decided to take his money off the table at whatever price it comes in.